Good morning. Today is Thursday, July the 20th. The time right now in Singapore is 11:40 in the morning, and overnight market has been pretty quiet after the release of the retail sales on Wednesday. So basically what we are expecting right now, the market is just going to grind all the way to the weekend itself. But overnight, we still see equity index in the States continue to charge into the new high for the year. We have the Dow Jones itself at 35,234.05 overnight. And this is getting very close to another sell zone, which is 35,400 to 36,080. And I think that could be another possible target for the market. But overnight, we see a reversal pattern in the 4 hours time frame right after the 35,234 has been traded. Now, overnight, we also see the release of company earnings reports. And the one that stood out was Goldman Sachs. We report a whopping 8% drop in earnings for Q2, and this is giving us an appetizer as to what to expect for companies after the very rich valuation that we see in the first half of this year as a result of equity markets charging into the high for the year. So this will be something that we have to watch out for as more companies release their earnings reports. And if the market do retrace from where we are right now, the target for the time being, it will be somewhere between 33,400 to 33,600, which is represented by these two parallel blue lines that you see on the screen here. Now, in the S&P 500, the market also charged into a new high. You can see the volume has been pretty limited. The new high is 4,577.6, which is smack in between the price range in which I think is vulnerable to the downside. This area is 4,512 to 4,537.3. And if, like I say, if there's going to be any pullback from current levels, the immediate target will be somewhere between 4,328 to 4,385 levels. So again, do watch out for that possibility. In the Nasdaq, we again have a new high for the year at 15,918.05. And now this is getting pretty close to my target range of 16,265.9. So anyway, if the market do pull back, my level to watch will be 14,925. Okay, so do watch out for a possible reversal because earning reports are coming in thick and fast right now. Okay, and over in Asia, we see that the Nikkei 225 has actually pulled back from the earlier rebound yesterday. Yesterday, we see the market went up to 32,873, and this morning we see a pullback, and this suggests that the rebound that we see for 31,791 is very, very tentative and very, very weak. So there's a possibility we may see a larger degree three-wave pullback. So if that's the case, let's watch out for a market taking up the 31,791. That suggests the market may be doing a much bigger corrective pattern. Okay, and then in Hong Kong, we see that Hong Kong prices has actually rebounded this morning to an intraday high of 19,215.7, but since then it has come back down again, and this laid the stage for the market to continue to trade lower. And if we do close below 18,711 this morning, maybe the market is going back to test the 18,279 that we saw at the beginning of the week itself. So the ideal bracket for the market to go to, if the market continue to slide, will be 18,200 to 18,400 levels. So do watch out for this bracket of prices here. And over in the Shanghai Composite Index, we see the market has been struggling, although it hit a bottom at 3,181.56 earlier on in the week, but the market right now is pretty tentative, does not have any strength whatsoever, and that means the market may actually not be able to go to this 3,290 to 3,315 level if it ever does that. Okay, in the event the market break below 3,100, 3144, then the market may be hitting much lower. So this is a continuation of a pretty bearish market, so do watch out for that as well. In energy markets, we see that crude oil prices rallied overnight to a high of $76.83 on the back of a report that the crude oil inventory in the States has dropped by 700,000 barrels. So this is actually telling us supply could be short incoming. And right now we have a major heat wave hitting the entire United States, especially in the West Coast. So that means that energy consumption for air conditioning is going to ramp up. So this means that there will be more demand. At the same time, the stocks is not getting, is actually being reduced. So that is building up to be a bullish contraction here, in my opinion. So if the market continue to drop, okay, ideally I want to pick up some more long position at $72.64 to $73.36 if the market do pull back in a three-wave decline. So that will be a perfect level for me to pick up some more. Okay, and then in the gold market, we see gold has actually hit the high and beyond at $1,986, and now we have a marginal new high for the day itself. Let me see what is a new high for this new level as we are speaking. We have a $1,987.53, and then this market is marginally above where I thought the market will face resistance. So likely we will probably see a pullback, and ideally I want to see a three-way pullback back to 1,945 and 1,946 levels, which is represented by this shorter blue line that you see on the screen. Okay. Over in the silver market, we also have a marginal high at $25.27. And again, this market may not necessarily be as corrective as what I think it may happen in the gold market. But if in the event we have a pullback, the area to look out for will be $24.11 and $24.54. Now, over in currency, we see the dollar actually rebounded overnight to 100.25 and then subsequently pull back. And this is an area in which I have highlighted previously at 118 to 177, which will make the market very vulnerable to selling pressure. And it does look like sellers are coming out again from the woodworks. And if this continue, I think the market will break 99.22 on the next round, and maybe targeting 97 to 98. So do watch out for these levels to be hit in possibly as early as next week. Over in euro dollars, we see euro dollars has been coming off at 112.75, and the market has dropped a little bit, but so far the drop has been very corrective, meaning to say that the market may still go up and challenge the 112.75 for all we know, but down by and large I do expect a pullback, ideally to 110 to 110.55 levels. Over in sterling, we can see sterling has come up a lot more than what we see in the euro dollars, and that means the market traded to a low of 128.67 overnight. And right now, of course, the market is very bearish on sterling because we already expect the inflation numbers to come out to the point whereby they may have to do something more aggressive about it. So in the meantime, if we get a rebound in the sterling to 128.70 to 129.30, I think that will be another level to sell if you have not already sold at 130.70 to 131.85 levels when the market was trading at a high of 131.42. So let's watch out for that as well. In the Aussie market, we have a big ramp up in prices from 0.6750, and this is again where the prices I thought will be able to hold at that level was 0.67 to 0.6780, and true enough, the market actually stabilized here, and this morning we have a vote of confidence, and looks like the Aussie is on the way higher to take out the 0.69, ideally to head into 0.6933 to 0.70, which is more likely. Okay. And over in dollar Canadian, we can see that the dollar is beginning to slide as what we are seeing in the dollar index. And there is a real risk that if the market cannot hold at this morning low at 130, then it may actually go below 130.90. But in the event that we have a rebound, that will also fulfill a three-way potential rally here to 132.85 to 133.20. So I would love to see this rebound here, and because I think that will be a better area to sell the dollar versus the Canadian. But for now, let's say if you are buying, then of course there is the possibility that the market can go to 132.85 at least. Okay, then we put a stop just below 130.90 for that exchange. But this is not a great setup because the market is basically coming down. I would rather sell than to buy. But if you are those who are trading short term and want to scalp the market, there's the potential for the current market where it is currently trading at 131.35, perhaps going for 132.85. So that will be at least 150 pips if you want to go for it. Okay, for me, I will just watch this move and not get involved. And in the dollar yen, now this is where I think I want to get involved. Dollar yen has traded to an overnight high of 140, just under 140, and the market pulls down from there. Previously, I mentioned 139.85 to 140.36 would be the ideal level for the three-wave rebound. But this still cannot rule out the possibility of a larger degree three-wave. And then if we have another larger degree three-way, maybe the next target will be at 140.25 to 141.16. So do watch out for the possibility of another attempt to rally, and if it can be kept at 140 or 120, I think that will be a better, much better level to actually engage the market on the short side. Over in crypto, we can see market is basically very quiet. We see the rebound back below $30,000 in the Bitcoin, and currently it is still trading just marginally below the 30,000 mark. And I would love to see another dip below the overnight low, which is currently at 29,521. Like I said all the time, the previous low here on June 30th was 29,408. I would love to see the market take out this level, ideally marginally into this bracket of prices between 28,700 to 29,400 levels. That will be a much better level to engage the market on the long side, because the next move could potentially be a very explosive burst to the upside, way beyond 32,000. My original target for now, depending on where the market bottoms out, is somewhere between 35,400 to 39,000. So you can see the potential of this next leg here. But again, these are my opinion. It may not pan out the way I think it might. So do watch and do your own analysis. In the meantime, this is all I have for you, and I'll come back to you tomorrow with another update. Bye bye. Take care.